Rivian revealed that as of November 7, 2022, it had approximately 114,000 reservations for its EV products in the United States and Canada. Rivian's production ramp made progress in the third quarter. However, Rivian's valuation already reflects a sizable increase in production. Let's go over the numbers and explain everything you need to know. Hi, welcome to Intrigo, where we explore the exciting innovations in the world. Don't forget to click the subscribe button and ding the bell to set your preferences to this channel. It really helps the channel out. Rivian increased the number of electric vehicles it produced during the third quarter to 7,363, and the EV manufacturer is also making good progress with deliveries. Even though there was a significant production ramp in the previous quarter, Rivian reported weaker than anticipated revenue. The business has stated that it will delay some capital expenditures until the 2023 fiscal year. The EV manufacturer also reiterated its 2022 fiscal year production target of 25,000 electric vehicles. Despite advancements in production and deliveries, Rivian is fully valued in the market, and that shares have very little room for further gains. Since the company's IPO, investors have realized they made a mistake by overpricing low-output EV companies, which has caused the share price of Rivian to drop by about 66% this year. Based on the company's revenue potential, as we will see further down, Rivian's valuation is still significantly inflated. The company's strong production growth during the third quarter was Rivian's biggest success. Rivian produced and delivered 6,584 electric vehicles to customers in Q3 of 2022, setting new records for both production and delivery. In total, the EV manufacturer produced 7,363 electric vehicles in Q3 of 2022. This year, Rivian has delivered 12,278 electric vehicles while producing a total of 14,317 EVs. Rivian must produce roughly 10,683 electric vehicles in the fourth quarter in order to meet its guidance, with a full-year production goal of 25,000 EVs, which the electric vehicle startup just confirmed. The fourth quarter implied production goal assumes a 45% quarter-over-quarter growth. Additionally, Rivian stated that its reservation in the US and Canada has grown to 114,000, indicating a growth of 16,000 since the end of June, when reservations were reported at 98,000. Rivian lost $1.7 billion on $536.0 million in sales, missing the consensus estimate by $551.6 million. Rivian should be prepared for the company to remain unprofitable for the foreseeable future, as it is still ramping up production and has a relatively low factory output level. Total production to date has been just over 15,000 electric vehicles. Estimates indicate that until at least 2027 fiscal year, Rivian will continue to produce losses. Rivian reiterated its production goal for this year of 25,000 units, as well as its adjusted EBITDA target of $5.45 billion. Rivian, however, reduced its estimate for capital expenditures from $2.00 billion to $1.75 billion due to the electric vehicle startup's intention to postpone $250 million in capital expenditures until the following fiscal year. Shares of Rivian are currently valued at 5.6x of its P/S ratio, based on $5.62 billion in projected revenues for 2023 fiscal year. This seems like an extremely high valuation for a business that won't turn a profit for at least 5 years. The market may still be overly optimistic about the company's anticipated output for the following year despite a near 70% downward revaluation this year. With $13.3 billion in cash on hand at the end of the third quarter, Rivian has a long runway for liquidity and can practically guarantee the ramp of the R1T, R1S, and the commercial van bearing the EDV brand. Rivian has the best balance sheet in the EV industry and doesn't currently need to raise money from investors or dilute its stake. Due to these factors, Rivian also has the industry's lowest production risks. The potential for a slower production ramp for Rivian's R1T and R1S electric vehicles can be seen as a risk factor. Rivian's potential in the electric vehicle market could be harmed by a production delay in 2023 fiscal year. Additionally, there are risks related to recent recalls that could harm Rivian's reputation before it is able to provide customers at scale. Rivian's shares seem to be more than fully valued, and the company's valuation accurately accounts for its production potential. The third quarter production ramp indicates that Q4 22 production will increase by close to 50%, and Rivian did confirm its FY 2022 production outlook. Rivian, however, is not making any money and won't be making any money for many years. Given that production risks do exist and that Rivian has the best funded balance sheet in the entire electric vehicle industry, I think shares of the company are only a hold.